Thanks again for joining us. This is another one of our regular webinars. We actually took last week off, partly because we're all pretty busy with things like JobKeeper, but also I think things were moving along fairly well and people were getting a handle on things. However, at this point in time, we're actually now at the pointy end of JobKeeper, making sure you are correctly enrolled, you qualify, your employees qualify, and you have actually submitted all of the necessary documentation to get you online and get your payments through from the tax office, which we'll have a bit of a chat about shortly. So as I said, thank you very much. I have given a couple of minutes so that everyone could jump on board and get online, deal with technology. Hopefully, some of you have been on these calls before, so hopefully you're finding the technology quite useful, as well as the webinars. So I do appreciate any feedback that you can give us about the webinars so that we know how we're tracking and what you'd like to hear from us, and also what you wouldn't like to hear. Thank you very much. As I have done previously, I have got my colleague Claude Colliker joining me. So Claude, if you could just turn on your video as well, please.
Hello, Calvin. How are you? Hello, everyone.
Good, thank you. And look, we have actually muted everyone, so I will ask that everyone remain muted for the length of the webinar. However, we will give you the opportunity to ask questions later on, and as we go through, Serena has opened up the chat box so that you can ask questions as well. So appreciate that. And again, this week, just so that it's not just myself and Claude droning on, we have actually got a couple of our other colleagues online too. One of our other accountants, Michael Florio, is with us. Michael's been pretty busy the last week or so, processing a lot of JobKeeper claims for clients. And also Dawn Macaluso is with us. Dawn's been with me for over 30 years and with the business even longer. And she's also heavily involved in JobKeeper, as well as a few other things. So thanks very much, Dawn and Michael. Some of you may know those two guys, but I might actually drop them in the deep end during the session just to make sure that they're paying attention. So look, let's kick off. We have got a fair number online now. So I will just run through. As I said, I've got Claude and myself, but also Michael and Dawn, and also the normal housekeeping that we normally run through. Please keep your microphones off. You can show us your face if you like. Happy to see who's online and who's paying attention, so feel free to do that. We will run through the presentation itself before we actually move into some Q&A. There's been a number of questions already lodged and submitted to us. Our hope, as always, is that we can answer those on the way through. However, if there's still unanswered questions at the end, happy to go through them. And Claude, I think you found some interesting questions earlier as well, didn't you? So
yeah, absolutely. So yeah, happy to. I think most of the questions that have been asked for today, we will cover off in the slides. But yeah, by all means, if there are any unanswered, we're more than happy to answer them through the chat function once we're done.
Okay, so let's kick off. This is a very, very quick agenda. As we said earlier, excuse me, this is predominantly involving JobKeeper. We've done, I think, 3, if not 4 sessions on JobKeeper already, and we've seen it evolve even in that time, how it's changed, how the tax office were given responsibility for it, the measures that they put in and the guidance, which has been quite interesting. But also how to move through the process smoothly without sticking your neck in the noose, and also how to get the best out of your claim and your eligibility. So we'll have a bit of a chat about that. Importantly, in the last 24 hours, we've seen JobKeeper payments being paid to clients. So if you have already applied and completed everything that you need to do, Claude, I think we had a large number of our clients receive money yesterday, didn't they?
Yeah, that's correct, Calvin. So the monthly declarations for the month of April opened up this Monday just gone. So we processed a lot of those ourselves for our clients on the Monday and the Tuesday. And the ATO originally said that allow 1 to 2 weeks for payment, but we started to see some payments already come through as of yesterday, which is a really good bonus for our clients.
Fantastic. And I'm very keen to hear from people as they receive them. So if you are happy to do so and you've already enrolled and completed your monthly reporting, perhaps just drop a comment into the chat function, and Serena and Claude can keep an eye on it, just so that we know who's getting their money, who's still waiting. Perhaps some of you are waiting for a session such as this to complete the paperwork and get your claim in. But if you haven't already done it, please get your skates on. We'll also talk about a few other time limits and restrictions that are on us currently. So as I said, we have done a number of these JobKeeper sessions already, so we're not going to go into detail today. This is going to be a pretty high level flyover of what you need to do in order to get your claim through. If you need to go back and get into some of the detail, we have recently posted all of our recent webinars up onto our website. So take a look, there's the recordings. And Serena, I believe the presentation is also up there. So hopefully you can have a look, learn a little bit about that. Oh, actually, sorry, I've been corrected. Serena tells me that they're not on our website, they're on YouTube, on our YouTube channel. So perhaps, Serena, I might need you to shoot that out to everyone at the end of the session so they can get access to it as well. And I believe we may also be posting them onto social media, onto LinkedIn and Twitter. So take a look at those. But as I said, we can answer some questions at the end. So primarily, we're going to run through JobKeeper at a high level. The alternative test, which only came out 8 to 10 days ago, I believe, where the tax office gave guidance on, what happens if you don't strictly meet the tests due to other issues. We'll talk about the enrolment process, the monthly reporting process, and what we call our JobKeeper work plan, which is how we move through the process of getting you online and having everything tickety-boo and capable of getting paid quickly. We also wanted to just round out by talking about some year-end planning issues. And as always, we've been talking about this for the last 2 months now, a bit of business continuity and cash flow planning. So still critically important in all of this. And finally, we'll have a bit of a Q&A at the end. So if everyone's happy with that, I'll move through. And as I said, this is fairly high level. So if you wanted to ask questions, we may try and answer them as we go. Otherwise, we'll complete them at the end of the session. So the summary of JobKeeper, as we've said previously, JobKeeper is a federal government subsidy paid to eligible businesses affected by COVID-19. It effectively is a mechanism to maintain employees and contribute towards the wages that you have to pay them if you've had a decline in your business. So it enables, yes, as I said, I'm jumping ahead a bit. I think I know this word for word. Enables eligible employees to pay their employees at least $1,500 a fortnight. Eligible employers will be reimbursed that amount. However, it is in arrears. So as I said, or as Claude and I mentioned earlier, we're now seeing payments come through, and they came through yesterday, being the 7th of May. They are reimbursements for wages paid in the month of April. So it'll make more sense as we go through, or if you've been through the process, you'll understand why that is so. Employers need to pay eligible employees a minimum of $1,500 before tax per fortnight. And as we said, this will get paid back to you in arrears each month by the ATO. If employers do not continue to pay employees, they will cease to qualify. Okay, so that is a very quick summary of what this is intended to do and how it operates. We'll get in a little bit of detail, but I won't dwell too much. I prefer to have a chat to everyone and open up to questions at the end. This is critically important as well. The last session that we had, we talked about you having to, the necessity to pay all of your employees that $1,500 minimum by the 30th of April. Just prior to the 30th of April, the ATO came out and extended that deadline until today. So if you haven't paid your employees for the month of April, however you do want to qualify, and receive this back, you must pay those people by today. So that pay run must go through, must be dealt with via STP, even if it relates to April. Okay, Claude, that's correct, isn't it? We can still do a pay run for April, but it must be paid by today.
Yes, that's correct, Cal. Yeah, so the ATO have given a couple of weeks or a week and a bit extension from the original 30th of April deadline. So as long as you run a pay run and pay your employees by today, it'll still form part of the first 2 fortnights for April to be reimbursed back by the ATO.
Fantastic. All right, thanks, Claude. And the other aspect of this extension from the ATO was that previously you had to have registered by now for JobKeeper. They actually have now extended that to the end of May, being 31st of May, to register for JobKeeper, enroll for JobKeeper, and allow you to apply for JobKeeper. So I'm using specific terms here, guys, but they are all different in the context of the tax office. So they push this back so that now, as long as you make your payment to your employees for April, and as long as you qualify for the month of April, you still have until the end of this month to actually register and get the paperwork done and report. So hopefully that's making sense now. Sadly, we've been dealing with a lot of these issues that just change day to day. So tax office are definitely keeping us on our toes. And that's why we run these sorts of sessions, so that we can get this information across to clients quickly and easily. I think we shot out an email last Friday that gave some details on this, but we wanted to get face to face with you virtually, in a virtual way, so that we could reinforce this. The JobKeeper turnover test, I think most people know that you must have a 30% fall in your turnover. Okay, so that in order to qualify, you have to demonstrate that there's been a 30% fall in turnover. Critically important to this as well, though, is you only need to pass this test once. So if, for example, the month of March, and that's where all of this started, if the month of March you suffered a decline of 30%, then you will qualify, irrespective of how good or bad your business has travelled from April through to September. Okay, they can't take this off you once you qualify. And again, the intention is to be able to maintain employees and assist the business. So it says here, at the time you enroll, you need to confirm your business in a relevant period has had or is likely to have a 30% fall in turnover. Okay, so a couple of critical tests right up front are, did you suffer a decline in March or April, for example? And now that we're at the end of both of those months, we can tell pretty closely to the day it closed off. Or do you anticipate that months going forward are going to decline? And this does give you the ability to forecast. Now, that's where there's a little bit of greyness in the whole thing. However, we can chat further on that with you, either one-on-one, or we may even get time to talk about it a bit later in the session. I mentioned earlier the ATO released some alternative tests, and those alternative tests mostly rely on situations where, for example, you bought the business during the year, you only started the business in the last 12 months, because a lot of these comparisons relate to the same month 12 months ago. So, for example, how did your turnover go for March 2020 compared to March 2019, or April 2020 versus April 2019, or the June quarter 2020 versus June quarter 2019. So the alternative tests, and again, we spent a fair bit of time on this 2 weeks ago, chatting about what these tests meant and how they were applied and when they were applied. So I'm not going to go into too much detail. Claude, are you aware of whether that legislation has been passed?
I believe it has now, Calvin. So
Okay. Right.
yeah, were a couple of examples, or sorry, circumstances where I had to apply the alternative test to a couple of clients. Specifically, they started their business 1 July 19.
Okay.
So we're able to qualify under
Right.
the first alternative test. Yeah. So yeah,
Okay.
I do believe it's
Fantastic. Okay, so this does give a little bit of wriggle room for those businesses that fall under these categories. As I said, I'm just going to scroll quickly through these. and it refers to some of the circumstances. The tax office have been playing catch up with this. Everything that's been happening in the last couple of months, the government will come out and announce something, and the tax office have to administer it. And as such, although they're a big beast and they take a long time to move, under these circumstances, they've been very nimble, which has been fantastic. And they turn up for the books because the tax office normally take forever to initiate any change within their system. So they're operating very well, and we're actually finding they're quite responsive when we make phone calls. I think, Dawn, you may have contacted the tax office recently, and I think they either answered your call very quickly or they even called you back. And I think, Michael, you may have had the same experience.
Yeah, I've found with the ATO that pretty much their online systems have become so easy to use that for us there's probably no requirement to contact them. We've been able to do everything pretty much online. So
Okay.
I think Dawn has probably spoken to them previously.
Right. Yeah, I did contact them. They were initially experiencing an hour and a half wait times to get through to the COVID section, but that's now reduced to half an hour or so. And they were really helpful. So they actually rang me back once I'd finished the call with them to answer another question that they weren't 100% sure of. So no, they are being very helpful, but yeah, there is still a little bit of a wait, but I believe it's improving.
Great. Fantastic. Thank you very much, Michael and Dawn. Unfortunately, Michael and Dawn seem quite shy. They haven't turned their cameras on. I have asked them to do that, but I'm hoping they're not sitting at home working in their pajamas still. And I know Michael got a haircut. There's Dawn. Thank you, Dawn, to see. And Michael's had a haircut too, so that's great to see. But look,
just
thanks
had to work out how to turn the camera on. That was all.
Okay, thanks very much, guys. So look, I'll come back to you shortly if I do need anything else, but thank you. Okay, so as I said, we're skipping over these pretty quickly because we have dealt with them previously. And we also see where each of these tests has their own, each of these circumstances has their own test. They're not all the same test. Importantly, in all of this, and the government have come out and said this since day one, the Commissioner cannot determine, the Commissioner can determine under certain circumstances whether you qualify. They have a very large discretion in applying this. So we have seen the original guidance was that if you forecast that your turnover should fall by 30%, however, it turns out that it only fell, for example, by 28%, as long as you have put together a robust argument and you have formulated a very strong cash flow argument, then we're told the tax department won't knock you back. And this is one of the very important things, is that if you get this wrong, this entire process, the ATO can come back to you and request repayment. And as is normally the case, penalties and interest. So it's very important that if you're applying for JobKeeper, it's no different to lodging a tax return. It's all self-assessment, and it falls on the business owner's shoulders to take responsibility for it. So we are doing our very best to assist wherever we can, to guide clients, to tell you how the legislation should be applied. At the end of the day, though, the risk lies with you, the business owner. So just need to keep that in mind. However, we put in place some pretty strict processes and procedures to ensure that, all right, well, we've ticked this box, we've ticked that box, we're making sure that you're covered fully, and we have the necessary documentation in place to justify any claim that we put in. That, of course, only applies if you're forecasting forward. Hopefully, if you're basing it on actual results, it should be pretty well known. And I might throw across to the other guys. They've done a lot more JobKeeper claims than I have in the past fortnight. So in particular, Michael and Claude have done a lot, but I know Dawn's been involved as well. So yell out if I get anything wrong in all of this. But actually what I may do, I may actually ask, well, I will ask Claude and Michael to chat about a few of these aspects. But right up front, it is critical that if you're going to go down this path with JobKeeper, that you actually enroll your business. Okay. So for us, we use, the ATO online services via the ATO portal. If you are doing it yourself, you use the business portal. Okay. And it is at this point that you must show that your business has experienced a fall in turnover, and it'll ask you which month, and it'll ask you about employees and particularly any eligible business participants. And I know a number of the people on the call actually should, as long as their businesses qualify, they themselves should qualify as an eligible business participant. So don't miss that one. That's a pretty important one if you're employing and you qualify for your employees. Don't forget yourself, because it's worth potentially $19,500 to you over the next 6 months. So keep that in mind. JobKeeper Enrolment. This is the second step, I suppose, is nominating your employees. Now, we again went into a lot of detail a couple of weeks ago in relation to which employees are eligible, how they become eligible, which ones are ineligible. Okay, but you must be also getting nomination forms from each employee. You cannot claim JobKeeper unless you have a nomination form from that employee. Dawn, that is spot on, isn't it? And you actually have done this for a number of clients where you've actually sent out the employee nomination notices and gotten them back from the actual employees to ensure that it was all in place.
Yeah, that's correct. And you can find the ATO do have one of those nomination notices on their website, so you can download and just use that, send that out to employees, but try and get it back as soon as you possibly can.
Right. All right. Thanks, Dawn. We have actually got the link in the presentation, so once that goes out to you, you'll have access to that directly. However, if you go onto the ATO via their COVID-19 section, you should be able to find that notice pretty quickly as well. This notice itself is very similar to a tax file number, or what I call a tax file number declaration. I'm not sure they're still called that, whereby you must get the employee to complete it. You must maintain it on your records, but you do not need to send it to the tax department. That's, again, correct, isn't it, Dawn?
Sorry, yes, that's
great. Thank you very much. So straightforward process. And you just need to make sure you have all of these records in place before you lodge any claim. Employee nomination, under that as well comes the business participant. There is a similar form that must be completed by each eligible business participant. So as I said a minute ago, there's a number of you on this call who qualify. So it's important that not only you take care of your employees, but you also cross the T's, dot the I's for yourself. It's worth, as I said, close to $20,000 to you or to your business to get this right. Okay. The identify and maintain your eligible employees. There is a bit of detail in here, guys, so I apologise for that. However, how you maintain these records depends upon your payroll software and how you're registered for STP, and also the number of employees that you may have. So you can have a quick read through that if you like, and I will probably, and there may be nothing to add, but I will ask Dawn and Claude in particular to just chime in if they believe we need to expand upon anything through here, but this really depends upon how you report your wages. Would that be correct, guys?
Yes, spot on, Calvin. Yeah. So, we obviously have most of our clients on Xero, and they run Xero for their payroll lodgements. And once you go through the whole process with Xero, even to the point of doing the monthly declarations, because they report with STP, and Xero has the ability to push that information direct through to the ATO. There's almost a pre-fill of the employees that you've paid. So it is a very simplified process using Xero. I'm guessing if you use MyOb, QuickBooks or something similar, you would have very similar features that they would have as well. So, but yeah, with Xero, it's a very, very good process that they've developed for this, the JobKeeper payments for employees.
All right. Thank you, Claude. Dawn, you don't have anything more to add?
No, that's about it. I mean, Xero is fairly straightforward, but I do recommend you just having a look at some training presentations that they've done, or contact us if you're unsure exactly what needs to be done.
Okay. Michael, do you have anything further to add on that, or you're finding the same as the guys?
Yeah, no, exactly right. I think Dawn's advice in terms of, I mean, there's a lot of material on Xero's end to look at, but more importantly, you know, we're always around to sort of help in that regard as well. So,
great. Okay. Thank you very much, guys. Look, as I said, it depends on your software, it depends on how many employees, how you report for STP. So hopefully whatever platform you have in place assists you to walk through. The monthly reporting as well at the end of each month. This is, again, very, very important. You must report monthly in relation to your current and projected turnover. And the projected turnover is something that stumped a few people. But very, most importantly, it's current turnover that we need to deal with. But they do want a projected turnover figure, as in a forecast. So, as I said, that stumped a few people, and we've walked it through with them to confirm that we're not sticking our neck in the noose and making sure that we get the right information across to the tax office. The tax office assure us that that forecast is purely for statistical purposes, to actually monitor how well or how badly people think their businesses are going to perform. However, we're giving very important information to the tax office, so we have to get it as close to correct as possible. As we said there, do note this is not a retest. It is simply a way to track how your business is progressing under the JobKeeper scheme. So don't think that we're going to set a forecast and then we have to either meet that, or it has to decline, or it has to exceed it. It's not a retest. As we stated earlier, once you qualify for JobKeeper, that's it for the next 6 months. There's no further qualifications as long as your employees are eligible and you continue to be eligible as an employer. And by that, we mean make sure you do all of the reporting, all of the applications, maintain your status, and nothing else changes. Okay. I will, if your eligible employees change or leave your employment, you'll need to notify the ATO through the monthly declaration. So that's really what that's about. The declaration is that you started with, for example, 15 employees, 2 have left, you've now only got 13. Okay, so it's important that those sort of records are kept, and we're identifying it as we go along. Platforms such as Xero do assist in this regard, so it does make life a lot easier. Submitting your monthly report is just as simple, or simple for guys like Michael and Dawn and Claude, that's for sure, is to log on to the portal, provide current and projected turnover, reconfirm eligible employees, and reconfirm your details. Some of those details, I assume, also include bank details. Claude, Dawn, does that come up each time?
Yes, you need to put your bank details when you first register JobKeeper, and then it asks you to just reconfirm the bank details are correct. Okay. And you've got the ability to edit that as well.
Okay, and for obvious reasons, they want to be able to get the money to you as quick as possible, and you want to receive it as quickly as possible. So, if you do have a look on our website, you'll see the process listed there. So no need to take notes going through here either, guys. Even though you will get a copy of this, you don't need to worry too much. You can always go back to it. Alex, I can see you've raised a question here. Can I just ask you to hold for the moment, and then I'll come back to you if that's all right. I just want to keep running through this section of it to make sure that we've got everything covered. As I said, the JobKeeper work plan is what we refer to it internally. And as I said, this is how we can help out if necessary. These are the steps that we go through to make sure that everything's under control. So the timeframes are extremely tight as well. So we need to be very careful about when documents are lodged. Are they lodged on time? Are they lodged in the right manner? Do they contain the right information? Okay, so there's the 6 steps. And again, this is listed on our website. But these are really the 6 stages that we go through in helping clients. Some clients we've done all of them, others we've just done some of them. But we are available to assist you if need be, and we can work through these sorts of things. So hopefully everyone has read those, and it's really what we've gone through already. Claude, is there anything else in there that you're finding throws a spanner in the works?
Oh, look, there's always certain clients, and I think there's a couple on the call today that have a couple of curly questions, which unfortunately is not a black and white answer. So that requires a bit more investigation, contacting the ATO. I think Dawn mentioned before, the ATO has got a dedicated JobKeeper hotline. And from my experience, they are very good in answering these type of questions, again, and use some clarity. So yeah, this obviously is not a one fit for everybody. Everybody's business is different, their employees are different, circumstances are different. So like Calvin mentioned earlier, it is a self-assessment. So you need to make sure that you've got not only your basis for reduction in turnover eligibility that you can justify, but also make sure that you've got your employees are all eligible to receive payments. So yeah, there are going to be curly circumstances that we're working through, but in the main, for 90% of our clients, it's a pretty good fit in getting this done.
Thanks, Claude. Look, I have just gone back to Alex's question, so I'm happy to answer that if you like. Alex, your question is, the projected turnover may be 10% or 50%. There are a lot of variables. What do you recommend if we are concerned that it will be costly in the case where we don't qualify? Now, I can see you on screen there, Alex, as well, so feel free to sort of nod your head or shake it. But I'm assuming that you're saying, okay, well, if you do apply for JobKeeper based on a forecast and it turns out that you're not eligible, is that what you're referring to? Okay, so we have had this situation where we built what we believe to be a robust model for forecasting revenue. And we've said, all right, well, it's due to fall. However, with any business at the moment, we don't know whether it's going to skyrocket or fall through the floor. We don't know what's going to happen next week, given the environment we're in. However, personally, I'm fairly optimistic about where we will go, but times change pretty quickly. So if we find that there is a forecast and you've built that around known quantities at the moment and known activity levels and demand and those sorts of things, and you can justify it, as I said earlier, if you forecast a fall by 30 and it only falls by 25, we're told the ATO will be able to apply their discretion and you'll be fine. You won't be made to repay it. We also know that if anyone fraudulently accesses these benefits, the ATO will not be so forgiving. They will go hard on you and apply severe penalties. So it is quite scary, and we know the powers they've been given to enforce this. However, where there is risk or doubt or uncertainty about whether you will actually be able to keep these monies and whether you were entitled, our advice is to those clients, the money that you do receive from JobKeeper, wherever possible, and it's hoped that, if your business has done all right or it's still doing okay, you are able to in some way quarantine those funds for the time being, because keep in mind, we only need to pass the test once. And as soon as we have passed that test and ticked all the boxes, and we know the tax man's not coming back, that money's yours to keep. Okay, so what we're saying is, if you can, put the funds into a separate bank account and sit it there, because we're really now talking about less than 2 months. We get to the end of June, if we've used the June quarter to forecast, By the end of June, we should know whether we ticked that box and we had a decline. If we didn't have a decline, then we would be going straight to the tax department saying, Mr. Tax Commissioner, these are the circumstances. Here's all of our documentation. This is why we feel we're entitled to it. We missed the boat slightly, but this is why we forecast it and we made application. So hopefully that answers that question, Alex. It's not black and white. And because this is so very new, we're not seeing any case law or history of these things. But hopefully that is what you're asking. Does that answer your question? No? Okay. Well, that is the part that you have got with, it's a bit of the chicken and egg type thing with all of this, in that in order to qualify, you must pay your employees. So Alex has said, my concern is that the money has already been paid out to employees. So this is where you've got to have faith, or you've got to back yourself to say, all right, well, I am going to maintain these employees on the basis that I'm going to be entitled to JobKeeper because of the planning and the forecasting that I have done. It's not a perfect science either. And as I mentioned a couple of weeks ago, the government's view was, well, if you can't afford to maintain the employees, you go to your bank and you ask them to lend you some money until you get JobKeeper. But that ignores some basics of business too. So, which is why we had John Correa on talking about potential options for finance. But it is that situation, Alex, where you need to look forward. You need to try and tick the box on March or April, or you need to be looking forward to say, all right, well, look, I know my business has taken a hit. And it's quite clear cut with some businesses where the doors have been closed or they've been forced to go from a full service restaurant to just takeaway. So, Alex, look, perhaps we'll keep moving along. There might be some other answers on our website if you haven't already had a look. But if you're still stumped on that, then it might be a case of, all right, well, we need to do a bit of work with you to identify how to get access to it. This is quite valuable, particularly given the number of employees you've got and yourself in your business. So if you're okay with it, I will move on. We might be able to come back to it, Alex, if we can. All right, so sorry, I got up to our work plan. They're the steps that we've talked about. This is really what we've established is the cost in us doing this. And again, we've tried to do this on the leanest possible model for the processes that we need to follow to work through. So again, I won't dwell on this. This actually deals with just the functions that we need to perform to get through each step of the way. But as you can see there, the cost of $750 plus, so much per employee. If we get this right, I mean, we had one client with 32 employees who stood to be in receipt of over $600,000, I think it was, Claude, recently. So, for around about, or in his case, it was probably $1,500. He also would have received the eligible business participant amount. So he would have been covered in the first fortnight. So we're trying to do this to get everyone on board, to get everyone eligible, and importantly, get some money back into your bank account. Again, this is listed on our website. So if you needed to refer to it, or if you're in your specific circumstances, if you want our help, come to us and say, look, I want you to do A, B, and C. Can you confirm the cost, and we'll get it done. Okay, pretty straightforward. Claude and Michael in particular can do it with their eyes closed now. Not that it takes 5 minutes. It does take a fair amount of time, but they've done a large number of them, and they understand what to do and what not to do. Critically important. You don't want to tick the wrong box in this because you won't be eligible. The process in summary: enroll for JobKeeper no later than the end of this month. So again, 31st of May. Step through the self-assessment process. That's really important, guys. That you must self-assess and ensure that you are eligible. You must get your JobKeeper nomination notices in for employees and for eligible participants. and you must identify and maintain those employees, and then send the monthly declaration to the ATO. Okay, so sounds straightforward. I'll assure you it isn't. And I know Claude and Michael and even Dawn are nodding their heads, because even in the last week we've had some real curly ones where, you know, we've seen clients that have done some interesting things, and we've, you know, had to work around and work with payroll systems, work with accounting packages, work with the ATO. Dawn knows that quite well now, to make sure that they're eligible. But the good news is they've got their money. So and it's always good when the government's giving you free money, if you like. Michael and Claude, do you have anything that you might like to add?
Yes, Cal, I just want to add one thing. Just remember, guys, this stimulus package for JobKeeper runs through to September. So just because you don't qualify for, and this might answer part of your questions, Alex, or queries, just because you don't qualify for March or April, you can still qualify for May, June, July, August. Okay, so Cal and I are working closely with a client at the moment. He's in the retail space, and when all this happened, there was a lot of doom and gloom, but he ended up finding out that his product was well needed. So he's had actually some very good trading period. So he doesn't qualify for March or April. However, we're anticipating May will start to decline. So what we're saying to him is, right, let's reassess after the first 2 weeks in May. We can then see how we're going to be tracking for the rest of the month of May. And if he then meets a 30% reduction, we're going to apply for him for May, which then means he will get the first payment in June. And then we've got that 2 weeks in May if he does qualify from a turnover reduction eligibility, we'll then make sure to identify all his employees, make sure that they've all been paid correctly for the month of May, as in everybody's been paid a minimum of $1,500 a fortnight. And then we register him, and then he'll qualify for May. If he doesn't do it for May, we'll then look at June. So it's great. I mean, this was all open for, as of, April was the first test period, March, with April being the first payment of wages. But it does go through to September. So just because you missed that on March and April, you still have an opportunity to get something back in the next couple of months, 3 or 4 months.
Right, thanks, Claude. And yes, I know exactly who you're referring to there. So yes, it's a very interesting one. But he is, as Claude said, he had his biggest week, if not biggest month ever in the entire history of his business. Yet, come 1 or 2 months down the track, it could fall in a hole, and he'll find that he does qualify, and he gets all of these payments come through. So keep that in mind. It's not just March or April or even May. It does run through till June. So thank you very much. Look, what I will do is I'll keep skipping through because that really deals with JobKeeper in a nutshell. So we've gone into some detail. I didn't want to go into too much. I wanted to cover off on things importantly, and the important critical timeframes of it, and also talk about some of the issues that we've hit. What I did also want to talk about, though, before we wrap up, is some of the other matters that have been pushed aside in all of this. Okay, so we have actually dealt with JobKeeper now, but what I'd now like to talk about is just some of the final things that we do at this time of year normally. In fact, we're behind the 8 ball because JobKeeper and Cash Boost have taken precedence, but very important at the moment that we still consider year-end planning. Okay. And that's where we say you need to make sure you're taking good advice in relation to your year-end planning. In fact, year-round planning, because at the moment, again, a lot of people have overlooked lodging their Q3 BAS. And as you will all know, again, we ran a session on this, or a couple of sessions. It is via your Q3 BAS, your March BAS, that you access a large amount of money potentially from the government. In fact, we've had some clients that have already received their $50,000 benefit from that. So this is just a reminder, if you haven't lodged your March BAS, get it done ASAP. Additionally, cash flow planning. We need to get cash flow planning there. I've just noticed we've got a typo in there, so apologies for that. But this accountants seem boring when we talk about these sort of things, but critically important that you you continue to cash flow plan and look after your cash flow. So just please keep that in mind right now, right through to June, particularly in light of these payments. And Alex, that might be part of what you need to do now as well, as to, all right, well, can I continue to employ these employees, hoping that I'm going to get this money? What happens if I don't get it? What happens if my turnover drops by 40%, not 30%? We've sort of given out some information on this previously, where we've talked about a bit of stress testing your cash flow model. So very important. Keep monitoring it. Keep monitoring through to September. Keep monitoring right through. It's a critical part of business. FBT returns, I don't want to dwell on this. This is something, excuse me, we're right in the thick of fringe benefits tax returns. Doesn't apply to everyone. However, there are a number of people that get caught out by it. I might just get Claude to give a bit of a summary on what he sees with clients that don't even know what an FBT return is, yet get caught in the noose.
Yeah, thanks, Calvin. Look, FBT is not everybody's favourite topic. In fact, I don't enjoy it myself, but that's okay. But I suppose I just wanted to quickly touch base to say, and the main ones are, if you provide motor vehicles to either yourself or your employees, or if you do what's termed as entertaining with your clients, they're probably the two most common ones that we come across. Then you may potentially have a fringe benefits tax issue. And the way the ATO flags these is when lodging tax returns, one of the areas that the ATO asks you to complete is, do you have motor vehicle expense? So we would put, yep, there was, I don't know, $20,000 of an expense. And there's also another field called FBT recipient contribution. Now, if that is left blank, yet there's a motor vehicle expense in your return, that could potentially, and I do say potentially, raise a flag with the ATO to say, well, hang on, it looks like you have vehicles, or they see, on your depreciation that you claim with motor vehicles, they say, okay, well, you've got vehicles on your books, the business is incurring motor vehicle expense on your behalf. Have you considered FBT? So that's how the ATO can sort of start asking questions on yourself. And also the ATO is getting really smart these days with data matching. Like they cross-check records with the Department of Transport, or whatever they call these days, that do car registrations. They see who's buying cars. Are those cars under a business name? If so, have they been recorded correctly? Is there an FBT issue? So there's ways for the ATO to do a bit of cross data matching to find these things. And even to the point where we've been advised by professional bodies and other groups that we're associated with, that even if you do in a tax return put down that you have made a recipient contribution, and that just basically means that you have either physically paid the required amount back to your business to cover those motor vehicle expenses, and there is a calculation in working that out. So if you record it all correctly in the tax return, that's great. But it is being recommended that you still lodge a fringe benefits tax return, even to show that it's nil. And the advice we've been getting is that that proves to the ATO that you've identified that there's an FBT issue, you've dealt with it, it's been recorded correctly, and you're just lodging a nil FBT return. So, yeah, like I said, it's not everyone's favourite topic around tax. It's a bit dry and boring, but it is an area of focus with the ATO, specifically around motor vehicles. So that's just something to be aware of on how the ATO can, I suppose, find out things about your business just by certain labels on your tax return.
Thanks, Claude. Yeah, not my favourite subject. I know it well enough, but I don't like it as a tax. So thanks for the update. Look, thank you. I will also remind everyone, we talked about year-end planning, but tax planning as well. You know, again, everyone's thinking it's doom and gloom, but we're seeing some clients with some significant tax problems this year. You know, not everything is doom and gloom. There's still a number of businesses that are belting along at 1,000,000 miles an hour. In fact, some are flourishing at the moment, making a lot of money, and as a result are going to have some significant tax bills. So really important you keep this in mind at the moment and don't just consign it to next year or last year. Tax planning is very important to make sure you know what your likely tax liability is. You minimize it, optimize it, just make sure you're doing everything within your power to get the best result for your business, particularly when it comes to paying tax. So we can obviously help you with that as well. We talk to a lot of clients each year about tax planning, and we have over the years saved clients of tens of thousands, if not hundreds of thousands of dollars in tax by just having a chat to them prior to the end of the year, looking at their figures, looking at their structures, looking at certain assets that they may have and expenditures, and making sure we make the most of it. Other things you should be thinking about at the moment, again, number of clients on this call have discretionary trusts. And one thing that we talk about at this time of year each year is trust resolutions. That's the old trust minute that determines how income gets distributed. Once upon a time, you didn't really have to worry about this until you knew what your results were. However, many years ago, or a few years ago, probably 10 years if I think about it, the tax department said, no, we're a bit sick and tired of people using trusts and abusing them. We want the trustees to decide before the 30th of June how they'll allocate their income. So just a reminder for everyone out there, you must do your trust resolution prior to 30th of June. For those clients of ours that are on the call, you know that we contact everyone at this time of year and say, look, we need to talk about this. What income are you likely to make? Where are we going to distribute it? Who else has got income that we need to be aware of? Because this does come in, almost goes hand in hand with tax planning as well. So just a quick reminder, trust resolutions are very important in the next 2 months. Asset write-offs, we all know the tax department or the government came out a couple of months ago, 12th of March, I think, and told us all we could write off assets up to $150,000. In the past 24 hours, I've had 2 clients contact me to discuss this. So again, when it first came out, not too many people were interested in it. Now that the dust is starting to settle, they're thinking, yeah, I would like to buy a new asset. So they're looking at taking advantage of this, and an immediate tax deduction of $150,000 or up to that amount is pretty valuable at the moment, particularly when we start talking tax planning. Superannuation, again, keep it in mind. Not all doom and gloom out there. You've only got a limited opportunity to put money into super. You need to be aware of how much you can put in there, what the limits are, how much you've already contributed, and when you should be getting it into your super fund. Don't wait till the 30th of June. It won't qualify. At best, you should be doing it, no later than the 15th of June. At worst, probably the 20th, because I think last year they put some pretty strict cutoffs in there. Don't miss out on it if you intend to get money into super. Again, we talk about tax planning. It's a critical one and a pretty basic one for us. Business continuity. I'm going to skip through this. We've talked about it previously. We've done a lot of work on it. We've emailed a lot on it as well. These are the areas that we work through with our clients, still working through with clients. And this is a sort of work that we've been doing again since early to mid-March. So very important, even though we're sitting at home, working remotely, we still are all capable of working with you using Zoom meetings and other technological tools. So look, that is pretty much it for us today. I do have some questions, but I'm running short of time here. But what I am going to do is run through what we have listed A little bit different today. We haven't put the answers up, but we'll try and answer them if we haven't already. So the first question is, a business trading for less than 12 months, what is the best way to measure average turnover pre-March? Look, that would involve how many months turnover you've got, and there are some rules in place for that as well, I believe, Claude. So under the alternative tests.
Yeah, correct, Calvin. So I suppose an example of that would be if you started to trade in, say, I don't know, December of 19, you started your business, then you would effectively get your monthly turnovers for December, January and February, get a total divided by 3, and that becomes your monthly average turnover. Then you would see what your March turnover is, and if your March is down by 30% compared to that 3 monthly average, then you would qualify under the alternative test.
Okay, thanks, Claude. We report with quarterly BAS statements of the ATO. Can we also report quarterly within the provisions of JobKeeper? Michael, you might want to answer that one.
Yeah, so you can. Unfortunately, though, when comparing quarter with quarter, again, we need to wait until the June period is completed so that we can, if you're looking at June, but same with March, if you compared it with March's quarter, that's viable as well. So you can compare quarters on quarters. Just be wary that June is at the moment a forecasted amount.
Right. Thanks, Michael. And sorry if I'm rushing these. I'm trying to keep us as close as possible to our time frame. Can you provide a simplistic breakdown of how the scheme works, specifically regarding 30% fall in turnover? I'm hoping that we've answered that. Can I claim for 1 month and not the other? As we said earlier, once you qualify, then you've passed that test. So there's sort of, as long as everything else is eligible, you continue to be eligible. So it is a matter of passing the test and then ensuring that you apply and you lodge your monthly reports. Is the duration of JobKeeper 6 months? Yes, it is. Spot on. Goes through to September 2020. What's the likelihood of having to reapply, requalify after the initial qualification? There is no likelihood. Again, once you qualify and pass the test, that's it. Should we register despite possibly going over the 70% sales mark? Look, the registration process is one part of it. Assessing your eligibility and your employees is another. Applying and completing your monthly report is the clincher. That's what actually determines it at the end of the day. So, but you do have to be certain that you're going to, well, as close as certain as possible, as we talked earlier, that you are going to have that 30% decline. Do you have to submit your report before getting JobKeeper payment from the ATO? Yes, you certainly do. As we said earlier, we started lodging them Monday and receiving payments yesterday or the day before. Might have even been the day before they started coming through.
And that has to be done monthly as well, just so everyone's
Yes.
aware. It's not just a
Correct.
one-time forget. You got to do it every month.
The next question, by what date every month going forward do I need to lodge the monthly turnover declaration for JobKeeper? We've seen so far this month, you could only do it from the 4th of May. However, is there a cutoff date, guys? I don't have the answer for that.
I believe it's the 7th from what we're looking at the moment. Yeah, so it's the 7th of every month, apart from this month where they give them the extension to the 31st, being the first month. But thereafter,
that's to register, but this perhaps in relation to the monthly
declarations.
Yeah,
It's
still the 7th.
I still believe it's the 7th of the month.
Okay,
It is. That's correct. That's correct, Claude. It is the 7th. You have to lodge your monthly declaration by the 7th of each month.
This is why I have smart people around me. So thank you very much, guys. I appreciate that. I did not have the answer to that. Look, that was the last question that we had lodged. I can see that I think to a person, we've still got everyone online. So my apologies, we have slightly run over time. However, I'm happy to keep going for a few minutes if anyone has any questions. So does anyone have any questions that they might like to ask? And I suppose, you know, you can throw it into the chat section. Alex, again, you've said, can we apply for May at the end of May? It would mean that I would not pay the employees until late May, though. By then, I should know more clearly if we will qualify. Alex, I would say that's partially possible, because going forward, even though there was some time extensions given by the tax office for payment of employees, you will now find that you must be paying these employees per fortnight. So the government believe everyone gets paid fortnightly, despite that not being the case. So, and Dawn, you might be able to give me a yes or no on this. I believe that for each pay period being a fortnight, or representing that if you normally pay monthly, you do need to be paying these people. At the very least, they have to be paid by the end of the month. Is that correct?
Yes.
Yes, that's correct.
Okay. All right. So hopefully we're ticking off some of your questions, Alex. Lydia, thank you for your question. Will you not receive the JobKeeper payment for that month if you do not lodge by the 7th? You do need to lodge. Will you not receive JobKeeper payment for that month? You need to lodge, for example, by the 7th of June in relation to your May wages. So it is in arrears, Lydia. So what the guys are telling us is that unless you lodge the monthly report by the 7th, you won't receive the JobKeeper for the previous month. Is that correct as well, guys?
Yep. Spot on. Yeah, it is. Except for the month of May, because they've given that extra extension till
today.
Yeah, for today, and to register by the end of the month.
Yes.
Yep.
Yeah. So any other questions, guys? Andrea, thank you for that. I do appreciate knowing how people are feeling and how useful they found the session. Hopefully everyone else has found the session useful and worthy. As we've said previously, this could be a continuing theme for us, but only if people find it valuable. So happy to take any feedback from any of you, either via email or on our website or even in the chat, as to how you found today, whether you'd like us to run more or less, whether you'd prefer to see Dawn and Michael up here rather than Claude and my ugly faces. And in particular, what else you would like to know about, because we're happy to spend the time talking to clients and you know, pointing you in the right direction. If nothing else, it allows us to keep up to date with you, keep in touch, and I think it shows that we care about what's going on in your business. So we want to be able to help everyone through this process. So look, it doesn't look like I've got too many other questions. Peter and Bill, thank you very much for those comments as well. Looks like you both enjoyed it. So thank you. Thanks to everyone for joining in, and in particular to my team, Dawn, Michael, Claude, thanks again for all of your help and input and supporting us and our clients. So thank you very much, guys. If that's about it, we'll wrap up for today and hopefully speak to you all again soon. Thank you very much. Enjoy the rest of your Friday and have a great weekend.
Thank you. Bye-bye.
Thanks,
Thank you very much.
Thanks, everyone. Bye.
Okay. Thanks.